Hey, this is Ali from FX Order Flow channel, and in this video I'm going to show you guys how I entered the trade on the S&P 500 right after NYSE Open, and it went really well. So this is NYSE Open, it's this candle, and the most important thing is that when the market is open, where is our location? This is 1 minute candle. Let me bring the 1 hour candle first. Look at the 1 hour. Let me change my color to green, or maybe blue. Yeah, blue is better. Okay, so we had a value area high and an NYSE value area, and the market was above it, and when the NYSE was opening, we had a retest on this value area. Okay, so we had a retest in this candle and the next candle on the value area on lower time frames. So we were above the value area high here, and it's so simple that I don't even need to explain it. If your market opens above the value area and the trend is bullish, it's the most obvious place to enter buys. So I took the chances, and also the 1 minute was really perfect. The volumes were really perfect. It was one of my easiest trades by using level 2 data. As you can see, the moment the market opened, we had a really high amount of sells here that all got absorbed by a passive buyer. So he was basically planting buy limits with a really high speed. So when sellers were trying to sell hard, he was keep planting the buy limit. The institution traders or the hedge funds, they would keep planting buy limits here, and they wouldn't let the market to come down. And then right after, they bought aggressively here. So I entered around here in the market. I'm going to show you on CFD later. And I closed 50% on 1-to-1 risk-reward ratio around here. As you can see, after that, we had passive seller was entered the game. But no matter how hard they tried to block this buy orders, the buyer was keep buying. So the market pushed higher. Eventually, the seller have to make the market a little bit down to where to exactly the VWAP. It's the average volume of the entire day. So why do they put pressure on the market to put it down on the VWAP? Because they are keep planting sell limits. They don't want the buyer to push the market higher. But when they see that they cannot do it anymore because the buyers are too strong for them, they push the market a little bit down to their average point of orders, which is usually really close to daily VWAP. Then they close their orders in this area, so they will take a small loss or almost no loss. In this case scenario, I don't know which one happens for them, but they either take their positions entirely out and take a really small loss, or maybe even they make a little bit profit. But yeah, right after that, as you can see, on the VWAP, we retest the VWAP 2 times and then go higher, they go higher, and eventually in this area, I was so close to TP. This is the all-time high on S&P 500. If I want to show you guys, you see, the all-time high is almost here on the purple line. So once we got close to all-time high, we had these 2 buy absorption blocks, and I would like to, my TP was like 5 pips away, something like that. So I didn't want to risk my position for 5 pips more of profit. So I trade my stop loss somewhere around here, and I got out with this candle, and right after that, we went and pushed to all-time high. So obviously I could make like 5 more pips, but it doesn't, like, it's not that much money. You're risking your entire position, which is a risk-free position, I know, but for like maybe 5 more pips, it's not reasonable. I'm not saying close your positions right there, but you can trade it really close. So I had a buy blocks. I didn't want the market to push lower more than 3 pips. So I put my stop loss here, and if I would put it like one more pip down, I wouldn't get hit and my full TP would be touched, but unfortunately I got hit by this candle. And yeah, this is my entire trade, and this is market close. Don't be surprised by these candles. It's a market close, and volume is really high on this. So on this exact candle here, right here, we had more than 48,000, almost 50,000 lots of volume was getting executed, and this just on this candle. So if I want to zoom more, let me show you more. So on this exact price, on this 1 minute candle, we had 4,000, almost at 4,600 lots of volume, 4657, and which is insane. This is how market close happens, and usually all these orders are getting stabilized by CME, so that's why the market doesn't move that much. Yeah, so I'm going to show you guys my CFD trade, the location and everything. As you can see, this is 1 minute candle, and this bullish candle was an NYSE Open candle, and then I entered here. I closed 50% 1-to-1 risk-reward ratio, because even if the market comes back and hits my stop loss, I wouldn't lose anything. And this is the place I trade my stop loss. It got hit. This is the market close, and this is the next day. It's important that you should know your exit point, and when you get close to that, you should trade your stop loss. If it hits, it hits. If it doesn't, congratulations for your full TP trade. And it's almost a full TP, like 4 pips away, so it doesn't matter actually that much. Sometimes it saves you. Sometimes you just keep your position, you don't trade the stop loss, and the market comes back and hits your break even after you had like a risk-reward ratio of 5. In this case, I had a 5 risk-reward ratio here. And you lose all of that just for 4 more pips or 3 more pips. And that's not reasonable. So that's why you should always do it. Sometimes it's good, sometimes it's not probably going to be good for you. Maybe you could make a few pips more, but even if you lose just 1 position, a risk-reward ratio of 5 for just having 4 more pips, that's not reasonable at all, and it doesn't worth it. That's why you should always keep trading stop losses. Yeah, this was my trade. If this was useful for you, check my channel and don't forget to like and subscribe.